Fortis is a dividend king in waiting with a history of 49 years of hiking their dividend. But can they keep it up? And are they a good fit for your portfolio? Strap in, folks. Let's get some current flowing. This is a company that has quite literally been illuminating our lives and portfolios for a very long time. It is also one of the top 10 most held stocks with Blossom users. It comes in at number 9, so definitely popular today, and it was also pretty darn popular yesterday. In fact, if we go back to 1885, when electricity was just starting to come into fashion, a new electric company in St. John's began to scare the dark away in Newfoundland. St. John's Electric Company was born, and they were eventually going to evolve into, well, current-day Fortis. Fortis was a main line when it came to power in Newfoundland, but they did have bigger dreams and have since expanded across Canada and deep down into the United States as they acquired more and more smaller utility companies to add to their electric collective. This expansion was great for Fortis as it not only increased their customer base, but it also diversified their overall operations into multiple regions and different regulatory environments. Fast forward, of course, to the present, they provide electricity and gas to over 3 million customers right across Canada, the US, and even the Caribbean. Fortis isn't just about size. They also have got one of the longest records for annual dividend increases among Canadian corporations. Talk about consistency. In fact, they are less than a year away of becoming Canada's second dividend king. That means 50 consecutive years of raising their dividend. That, folks, is absolutely not too shabby. Join the conversation. Let us know in the comments if you hold any utility companies. Your participation is well appreciated. Don't forget to like and subscribe to stay up to date on future content, and thank you for that click. What's really shocking about Fortis in a good way is their move towards renewable energy. Over the past few years, they've been increasing their investments in renewable energy, especially in hydroelectric, solar, and wind power. With governments pushing for cleaner energy, this could be a major growth area for Fortis. The shift to renewables isn't without challenges. It does require significant capital, regulatory approvals, and it's a highly competitive field. But if Fortis can pull it off, they may just be a step in the right direction for other utility companies to want to follow. Now, you might be wondering, is Fortis a good investment? Well, Fortis has a diversified portfolio of utility assets and a record of consistent dividend growth. So if stability and reliability light your bulb, Fortis might be worth considering. I really do like Fortis, and they were the first stock I ever bought. However, this is a deep dive, and we need to look at them without the heart entering the equation. We need to examine Fortis under the more analytical glow of our good old buddy, Mr. Math. We will begin, as usual, with the surface data. We've got a market cap of $27.47 billion and an incredibly stable beta of 0.20. Their earnings per share come in at 2.94, and they have a price-to-earnings ratio of 19.40. Now, the average in their industry is 14.70, indicating they may be overvalued, and we'll have to find that out in just a moment. For their price-to-book ratio, it comes in at 1.40. The average in their industry is 1.90. So maybe they're not that overvalued, but we'll wait till we get to our fair value calculations to figure that out. When it comes to their cash, they have a revenue of $11.53 billion, and their earnings came in at $1.42 billion. Those earnings are projected to grow by 5.86% per year, which is not too shabby. However, when we look at their free cash flow, that comes in at negative $728 million. I really never like to see a negative cash flow, as that never bodes well if it is allowed to persist for too long. This, of course, may be due to some of their significant investment within their business, but this is still suboptimal from a dividend sustainability perspective. When we look at their return on equity, that comes in at 7.66%. So that's a little low as well. I'd like to see that a little higher. Let's find out if they are overvalued, as the price to earnings ratio seems to suggest. So their current value comes in at $56.85. If we do a discounted cash flow model, we get the fair value at $51.20. So yes, they are overvalued by 11%. Some of these values I am taking with a grain of salt, only for the simple reason that when a company is expanding and pumping as much money into expansion as Fortis has been doing, it can sometimes skew a little bit of these values. Let's take a look at their returns. When we look at their dividend yield comes in at 3.975%. That is paid out quarterly in the amount of 56.5 cents per share. They've got a payout ratio of 74.83%. Becoming a Dividend King is very prestigious to Fortis. And even though this payout ratio is good, when we look at the negative free cash flow, it would normally be more worrying than it actually is. Fortis is not about to break their streak. In fact, if Fortis were to end the streak, they would more than likely experience a sell-off, as Dividend Aristocrat fans would be losing faith. Switching over to return on investment, for the 3-year, their price rose from $50.53 to $56.85. That's a return on investment of 12.51%. Add in those dividends, we get a total return 25.04%. When we move up to the 1-year, their price actually fell from $58.53 to $56.85. So that's a return on investment of negative 2.87%. Factoring in the dividends, we do move back into the positive with a total return of 0.94%. So far in 2023, their price has risen from $54.60 to $56.85. That's a return on investment of 4.12%. Adding in the dividends, we get a total return of 6.19%. That's not too bad, especially when you look at the fact that the entire energy sector had a very rough 1 year. Fortis did relatively better than the sector, which is fantastic. Let's move over and take a look at the debt situation. Fortis has a total debt of $29.19 billion, and their total equity, it comes in at $23.08 billion. That gives us a debt to equity ratio of 130.8%. I would love to see them get that debt down big time. I do understand that with rapid growth and their renewable objectives, they're holding more debt as a result. When we look at their cash and equivalents, that does come in at $576 million. So it's not really giving us a lot of help there. Let's take a look at their actual assets, so short and long term. Short term, they have assets of $4.16 billion, and they've got liabilities of $6.15 billion. That's not looking great. When we do move to their long term, though, we do see a small ray of sunshine. Their assets come in at $60.47 billion, while those liabilities come in at $35.40 billion. So long term, things are looking a little bit better, but debt is absolutely a problem for Fortis. In fact, their debt, it's not well covered by their operating cash flow, and the interest payments on that debt are not well covered by their EBIT, which is your earnings before interest and taxes. Overall, I do not like their debt situation, but I do understand it and feel it is what it takes to become a leader in renewable energy. Short-term pain for hopefully some long-term gains. So what is that final verdict? Fortis is just one of those companies you almost must cheer for. I am looking forward to seeing them join Canadian Utilities as Canada's second Dividend King. I have no doubt that they will accomplish this feat. Their debt is absolutely worrying, but not enough to keep me glued to their ticker. In fact, understanding their growth and the debt and the cost of some of their long-term goals makes it easier to feel good about my stake in Fortis. They are a solid long-term investment, and when their development and investment into renewable energy pays off, this is a company that will do rather well. However, in the short term, there are definitely better options out there. With that being said, I still really like Fortis. You get a nice little total return stock, which I would consider blue chip. They are a slice of safety in your portfolio, which is never really a bad thing. Keep the learning going. Watch my video on lazy investment linked on the left, or test YouTube's recommendation skills by checking out the video on the right. Your choice will decide the winner, and I will see you in the next video.